Hi, my name is Michael O'Donnell, and I'm a junior in Marquette University's Applied Investment Management program. In this Friday, April 1st, I will be pitching AGCO Corporation, ticker AGCO on the New York Stock Exchange with a price target of $184.14, representing 29.7% upside. AGCO Corporation produces and distributes agricultural equipment and replacement parts through a variety of brands. AGCO's largest brands are Challenger, Fendt, GSI, Massey Ferguson, and Valtra. These brands and others offer products such as tractors, combines, self-propelled sprayers, hay tools, forage, seeding, and tillage equipment, implements grain storage and protein production systems. In fiscal year 2021, revenues were generated in North America 23.9% of revenues, South America 11.7%, Europe/Middle East 55.9%, and Asia Pacific Africa 8.5%. AGCO was founded in 1990 and is headquartered in Duluth, Georgia. In the 1990s, AGCO's management aggressively acquired companies to expand product offerings and take AGCO into the European and South American markets. This strategy sought to capture growing markets and bring the technological innovation AGCO's brands offer to these continents. The farming industry has drastically changed since this time and faces serious challenges from rising world population, urbanization, and climate change. By 2050, the global population will reach 9.9 billion. A 20% increase from the current population. This will require farmers to increase food yields by 70% at a time when water supply will be 40% below global needs. Russia's recent invasion of Ukraine creates an even greater threat to global food supply. In 2021, Ukraine accounted for 12.8% and 10.5% of the world's corn and wheat exports, respectively. Global dependence on Ukraine, Europe's breadbasket, likely will result in the continuance of elevated commodity prices. These occurrences are forcing farmers across the globe to look for ways to decrease input costs and increase crop yields, and precision agriculture provides a solution. This farming method utilizes artificial intelligence, big data, and the Internet of Things to right-size inputs, hence increasing crop yields and creating substantial margin improvements for farmers. The global precision agriculture industry is expected to grow at a 16.34% compound annual growth rate into 2026. AGCO's focus on technology-oriented solutions has resulted in a 5-year revenue and diluted EPS compound annual growth rate of 8.49% and 43.23% respectively. It is recommended that AGCO be added to the AIM Small Cap Fund with a price target of $185.14, representing 29.7% upside. AGCO in 2015 launched Fuse, which supports their brands and product offerings through the implementation of precision agriculture technology and services. This method saves farmers at least 15% on crop inputs such as fertilizers, pesticides, and water. In 2020, Russia accounted for 12.6% of world fertilizer exports. Now farmers will be forced to look to other countries or decrease their usage of these inputs. AGCO is continually invested in precision agriculture, with the segment growing 34% year over year in 2021 to $540 million. Management forecasts that this segment will double in sales over the next 3 to 5 years. Considering the cost reduction capabilities of this technology, farmers likely are willing to pay a premium. As this has become a larger percentage of total revenue, AGCO's operating margins have expanded 400 basis points from fiscal year 2017 to 2021. The implementation and application of this technology will continually improve AGCO's operating margin going forward. Commodities such as corn, wheat, and soybeans are near or above their all-time high prices. This environment has led to AGCO's revenue growing 21.7% year over year. The probability of the continuation of these elevated commodity levels is growing with steady demand and continuing supply chain issues, including higher transportation costs. Russia's invasion of Ukraine will seriously decrease the global supply of commodities, forcing the need for greater production from other countries. When agriculture commodity prices are high, farmers experience greater profitability, enabling more investment in equipment, contributing to AGCO's top-line revenue growth of 10.8% in fiscal year 2022. In fiscal year 2021, AGCO launched 23 new products and completed 4 acquisitions. The acquisitions aim to enhance current and future products' ability to communicate, monitor, and track information about commodity health. Included in the new product offerings are the Fendt 1 and the newest edition of the Fendt Rogator. In a few years, AGCO will release commercial use of Xavier Robotics, a fully autonomous and electric seeding equipment, as well as non-gas powered equipment. These innovative product offerings will assist in boosting AGCO's revenue by an estimated 3-year compound annual growth rate of 6.01%. To reach an intrinsic value for AGCO, a 5-year DCF model was created. Using a terminal growth rate of 1.3% and a weighted average cost of capital of 8.03%, an intrinsic value of $183.60 was reached. Additionally, a PE multiple valuation was calculated using a weighted average peer multiple of 17.6 times, resulting in a relative value of $209.34. Finally, an EV to EBITDA multiple valuation was calculated using a weighted average peer multiple of 10.7 times, resulting in a relative value of $173.27. By weighing these models 80-10-10, a price target of $185.12 was reached, representing a 29.7% upside. The firm has a dividend yield of 0.6%. Risks. Pension plan. AGCO's pension plan is currently underfunded by $89.2 million. The inability to generate cash flow and plan returns would hinder the firm's potential ability to invest in growth opportunities and liquidity. Risk number 2, semiconductor shortage. A core input to smart equipment is semiconductors. If the semiconductor shortage is prolonged, AGCO's ability to provide clients with equipment will be challenged. The last risk is climate change. The Earth's average surface temperature has risen 2 degrees Fahrenheit annually since the late 1800s, most of which stemming from the last 40 years. Rising temperatures, droughts, and other weather anomalies would decrease farm profitability, posing a threat to AGCO's top line. Eric Hansotia has served as CEO since January 2021. Prior to his arrival at AGCO in 2013, Hansotia spent 12 years at Deere & Company, where he was the Senior VP of Crop Harvesting, their flagship business with facilities in Asia, South America, Europe, and the U.S. Andrew Beck has been the CFO since 2002, and AGCO is a firm for over 28 years. Out of the 10 board members, 8 are independent.